Hey guys, I'm Steve and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, do me a favor, hit that thumbs up button, hit the subscribe button as well. Trust me, you won't regret it. If you're a returning subscriber, guys, welcome back. It's Saturday morning, so happy Saturday to everybody. I figured I'd talk a little bit about the difference between stock traders and stock investors. Me, myself, I'm a stock investor and I'm not a stock trader. Now, yesterday, the reason why I brought this up, yesterday I made a video, and in the video I kept, for a couple of phrases, I used trading instead of stock trading instead of stock investing. So I want to apologize to everybody for that. The video was called "Why Are You Not Investing?" So you'll see that if you go there. But like, if you do, just, be cognizant that I didn't mean to use the word trading. I meant to use the word investing. So I apologize for that, for anybody that, gets confused or for that watches me all of the time. I'm going to get into stock trading first because it's very, a lot of people get, especially people that are ignorant to the stock market or have never invested, they think stock trading and stock investing is the same thing. It's not the same thing. And I want to get into the differences now. We'll go over stock trading first, and then we'll round out with stock investing in the latter part of the video. Now, we'll go over stock trading. Stock trading, the first thing about stock trading is this. It's usually a short term. And what I mean by short term is stock trading involves short-term strategies to maximize returns. Whether it's daily, monthly, or quarterly, these stock traders, they might sell a certain stock today off of news, something in the news where they can take advantage of by selling the stock multiple times in multiple amounts of shares, or selling that same stock or multiple stocks during that day, that month, or that quarter. A lot of what you see on the stock market, if you watch CNBC, you'll see the stock market in the morning, it'll take off on fire. And then all of a sudden, the same stocks that were up will drop by the end of market close. A lot of that is due to a lot of stock traders manipulating the market by buying and selling certain commodities and stocks, right? So that's one of the things you have to understand. Because the way people are like, oh, well, how does the market move? A lot of it has to do with day trading. What they do, they trade during the market day. Now a lot of them usually around 12, they're done. And then the market will settle off and be what it was going to be originally a lot of times. But it's not bad market manipulation. Don't get me wrong. I mean, stock trading is not an evil thing. It's just something that happens. I mean, it's a market. People buy and sell, goods and, just stocks and commodities. When I say commodities, it's like, things like you'll see on there sometimes they'll have cattle or rice, like corn. I'm like, I didn't understand it when I first said it. I'm like, you can trade corn. Who has a lot of corn to trade? It's a lot of things you got to understand. But that's the first thing, it's short term. Somebody might work 3 days a week selling stocks and then take the rest of the week off. I'm about to say crazy. You have to be cautious though with this, because this is not all of what you see in the stock market. This is not the sum total. And a lot of you young kids out there will watch, and you'll see day in the life of a day trader, and the guy will be on a yacht with his friends with a bunch of champagne or wine and beautiful women and, stuff like that. That's not always like that. And I mean, it's rarely like that, because honestly, stock market trading is one of the hardest and most stressful things to do. And unless you have some type of inside information or inside intelligence in these companies, a lot of people don't be successful. In fact, 99% of people that try day trading fail. I was at a YouTube meetup and I met a young man, and he was like, oh, I'm going to do day trading. I was telling him, I was like, I'm not trying to crash your ship or anything like that, but that's a dangerous game. Yeah, but the money, sometimes seeing things like that, that entice you can really throw you off, and it could end in a lot of, debt. Like me, I try to tell somebody, but I gave him some options and things he could look at, as far as trading, to see if it's really for him. And I hope he did take my advice on the information I gave him. I mean, it was free. I was just trying to help the brother out. I hope he did. So, I mean, if you're watching the video, man, I hope it helps you, So that's the first thing about stock trading. It's fast paced. Another thing about stock trading, a lot of people don't understand about day traders. You know, that's the title they have, day traders. Day traders, a lot of times, work for corporations. These big companies, these institutions that buy stock from other companies, because you know, companies do buy stock from other companies. A lot of people don't know that. PetSmart and Petco are competitors, right, in the pet field. They both own stock of each other. And it has a beneficial, it has a good benefit for that. Because if one stock is doing it, having a down year, the other stock might be having an up year as they're direct competitors, and they both make out off the gains and profit of each other. It's smart. Being in business is a strategic thing, people. You know, always remember that. Now, that's the first thing, right? A lot of these companies, like I said, these companies will have, you know, these corporations hire these traders, and they work under the company name, and they'll buy and sell stocks according to certain triggers that they have. Meaning, like, when I say triggers, they might have a buy-in order or a stop loss or something like that. Meaning, like, the reason why the market flips every day, say somebody has Microsoft, right? And say Microsoft fell to like $200, $250, right? I think Microsoft is in the threes right now. I'm not sure. Say Microsoft fell to $250, or we'll go 275. Microsoft falls to 275. These institutions already have computerized software ran by these traders that says, okay, when this hits 275, we're going to sell so many million shares. And it influences the market. Or they'll buy a certain amount of shares if the stock is going up. So that's why, you know, when you're looking on, a lot of times you're looking at a stock, and they might have the specs of the stock or whatever, and they say owned by institutional investors. They might say 75% or 99%, but this is what these companies are buying, and that's what it's talking about. A lot of these companies will own this stock because they see the promise in it, and they're riding with it, thinking that they'll get a guarantee in return in the future with this stock. Right? Now, another thing about day trading or stock trading, it involves more frequent transactions, such as buying and selling stocks and commodities, like I talked to you about. You know, it's no long-term strategy in this. It's buy now. Like you see the people out on the sales floor, like especially like in the 80s and early 90s, there'd be paper flying all over and people screaming and hollering and sell, blah, blah, blah. You see that in a lot of these stock market movies. Those are day traders. Those are floor representative companies that are day traders. And they're buying and selling different commodities and stocks at all a given time. You know, so when you see that, that's part of the day trading process a lot of times. Now, the third thing I would like to say, they use trends and indicators to predict price changes. And this is why I say 99% of people that try day trading, from watching a YouTube video and seeing somebody's life and looking past the work, but seeing the reward of somebody's labor, sometimes, even though it's fictitious a lot of times, what happens is they get caught up. They don't know that these people use certain trends, certain topics, certain indicators via software. Computer software. These people use a lot of computer software, and they deal with something called quantitative analysis, where they read the charts. And you got to remember, everybody that, and like a lot of people don't know, these day traders, they compete with each other. Some of them are friends from other companies. So a lot of people get a lot of inside knowledge. That's why you always seeing people getting fined by the SEC for having inside knowledge or doing some type of tomfoolery on these floors, because they get inside knowledge that a company might not be doing something right, or they about to merge with somebody else. So they'll tell, you know, whoever, or a lot of times they keep it to themselves and they have an advantage over the other. These guys are competing guys, you know. So it's just one of those things where, you know, they use software, a lot of software we don't have access to. And, you know, people want to be day traders. That's why I say 99% of people fail, because people see them say, oh, well, Starbucks is doing good, I'll just buy Starbucks and then I'll make $1,500 or $15,000 off of Starbucks. But to make that $1,500 or $15,000, you might have to have 20, 30,000 shares to even be able to make that amount of gain from your transactions. So it's a big thing. And, you know, like I said, I deal with TD Ameritrade, right? They talking about when you want TD Ameritrade or anything, this not show you how much money you have to have. They know that stock trading is like gambling. It's a big gamble. For you to start a stock trading account on Ameritrade, I think you got to have at least $25,000 in your account at all times. Because if you mess this up, they don't want to be liable for it. So they make sure you put up a significant amount of money and you sign paperwork saying that, you know, you understand the risk and all this stuff. But just from my understanding, you know, dealing with day trading, it's a risky proposition. And I would avoid it at all times, you know. Especially if I don't know nothing about the stock market, learn how the market works before you even look over there and, you know, say I can do that. You know, it's in my best interest to make sure anybody that listens to me gets something educational or something, you know, I mean, besides entertainment, you get something out of these videos. You know, I don't want to see anybody lose their money. You know, I mean, when I was taught and mentored by other people who had money, and they saw I had good character, they liked me as a person, you know, the best thing you can do is pass this on to people that, you know, to help them. You know, you guys sit here and you spend your time watching me, giving me part of your time. It's only customary that I give the same to you, you know. But let's get into stock investing. Now, stock investing, I'm very, very, very affluent at because I've been doing this for almost 8 years. I am a stock investor, meaning, and I'll get to me in a second, but we'll go back to stock investing. Stock investing. What is stock investing? You take a long-term approach to the market. You know, I have a financial goal. Most people that stock investors have a financial goal in time, looking over the long run. So I do a long-term gain. So whether the market goes up or down, if I put my money in beneficial businesses with good that are ran properly, and they are bona fide good companies like your blue chip stocks out there, whether the market goes up or down, the market goes up, I make money. If the market goes down, I make opportunity to buy more shares of my favorite companies. You know, they use compound interest. Now, before I get into compound interest, this is another thing about the long-term approach. Now, when I say long-term approach, I'm a lifetime shareholder, meaning I want to hold stocks and then pass them on to my children after I'm gone. So I'm trying to build, you know, bigger portfolios and more financial freedom on my journey, right? And with doing this, a lot of people say, well, you know, you want to hold the stock long term and lifetime. I don't want to do that. That's the thing about investing in stock. It could be something temporary. And when I say temporary, it could be 2, 3, 5, 7 years that you want to hold the stock for a specific purpose in your life in the long run, meaning down the road. Perfect example. Somebody wants to buy a house. A lot of people invest, you know, in lower increments of years over time to buy a house. You might want to buy a car for your son or daughter. Or you might, when they're 10, 11 years old, open up a trading, see how I go with that trading, an investment account with them and put a little bit of money in every month. Let them work their job when they get 16, 17. Show them the purpose of money and how to use it. It's an excellent thing when you have these investment accounts and they can save up for their car and they can see the money grow right before their eyes, you know, or retirement like me. So we got a house. I mean, it could be a boat. It could be anything you're working towards. Whereas if you sit the money in the bank, it would just sit there. But if you put it in your investment account, the money would grow. That's the first thing. We take a long-term approach to the markets with personal gain in mind on future endeavors. Second thing is, now I'll get back to compound interest. How does your money grow when you're in the stock market? I invest in what's called dividend stocks, meaning I get paid a certain percentage. whatever that stock or that company that I bought pays out to those who invest in it. Meaning, I have AT&T stock. I think AT&T pays like a 5% yearly dividend. So I make 5% on my total amount of shares in that stock in the form of dividends that I reinvest into the company. But that money, I can take that money off if I so choose, if I in my investment account, if I program it as such to where, like, I'll receive money from that instead of turning it over yearly and putting it back in the business, thus making more shares of stock to make my portfolio grow and make, my finances grow as well. That's and that's from the compound interest. When I say the compound interest is like the dividend that you're buying. It compounds over time. If you don't touch it and you keep putting it back into the business, your stock shares will grow. And over years of it piling up with you adding money as well, a snowball begins to roll. And then over a certain amount of years, the snowball gets bigger and bigger and bigger and bigger until the thing just takes off and it just blows up and it keeps going. And the whole time you hold it, that snowball's getting bigger. And it's compounding because the interest on that money is compounding within itself, thus exploding your portfolio. That's why I say around 5 to 7 years of steady compound interest, your stock portfolio will really take off. It'll take a hike. A lot of people show their portfolios on here, and you'll see they'll show you the track from years 0 to like 3, almost up to 5. It'll be a slow curve. And then when you get around 5, 6, 7, depending on the economy or the economic, where the economy is, you'll see it just pop and take right off. So it's one of those things, it just all comes down to your patience tolerance and what you're trying to buy. So, just keep that in mind when you're investing. Just have a plan. And it comes with discipline too. Second thing about investing. Well, I just covered it, but we hold, a stock investor holds something for a period of years. And like I was talking about, we take advantage of interest, dividends, stock splits. Like, you never know what the stock is going to do once you hold it that long time. That's another reason why you hold the stock, because you don't never know what the stock is going to do. A lot of people that subscribe to me, they talk about Tesla. Man, Steve, I had Tesla for the longest time. And man, it really took off. I had 2 stock splits and now I got 5,000 shares. I can't even fathom that. I'm like, yo, you got 5,000 shares of Tesla. And they're like, yo, don't never sell nothing. So, there's a lot of solid information out there. Even in some of my videos, man, some of my comments, you guys go look at some of them comments. A lot of these people out here, serious investors, they give a lot of good information. You can learn a lot from looking at my comments. But that's the second thing. You hold the stock because you never know what's going to happen with it. And if it's a good company, it'll benefit you in the long run from the compounding interest. Like right now, we're in a recession. Interest rates rising, right? Once this thing flips over, and I keep saying this in all of my videos, guys, you have to be in stocks, be in good, solid stocks, and be holding them. Because once we get out of this bear market and this thing flip, they are talking about this new bear rise. This new bull market. When this bull market starts, they said the gains might be epic, and I believe them. Because we got companies that you'll never think was down this low in price right now that are low, and when they take back off and everything normalizes, these companies go back to normal, man. This thing will skyrocket. So anybody listening to me, my subscribers that invest, do the right thing. Patience, discipline. You'll be okay. And third and final thing, guys, I want to say is this. As an investor, we just use fundamentals in evaluating the stock. You know what I mean? And you just look at the stock, you study, do just your due diligence of why the company's right for you, where you see the company going. If you believe in what the company's doing, a lot of times, guys, you'll be okay. And just, evaluate the stock. And everybody evaluates stock differently. So, me sitting up here and saying, hey, well, you need to look at this and the earnings per share or this and that. You don't have to be an expert, but just have enough surface knowledge to where you feel good about picking a stock that you want to pick. You know what I mean? Everything takes knowledge. You know, another thing is, you buy the stock, you don't buy the news. I mean, you buy the news, you don't buy the stock. You know, what the hell am I talking about? You buy the stock, you don't buy the news. A lot of news that come out and it'll be negative, or it'll be just something, or I say fluff, just to keep the show going, or to create speculation, but you don't believe everything you hear. You know, you go by what the fundamentals numbers say, and you know, when you look at the stock and like you go through and you look at a lot of the numbers in the stock, meaning like what they've sold in the past 5 years, the revenue and earnings per share, and different things like intangibles like that, you'll get an idea if the stock is right for you. But I mean, as always, guys, man, I just wanted to tell you the difference. So like, let's going back, we're going with stock trading. It's more of a short-term thing. They trade daily, weekly, monthly, and they usually trade for themselves, or they trade for a lot of institutions that they're hired for. They use a lot of software that we don't have access to, and a lot of these movies glamorize them, but it's far from the truth, and it's the most stressful thing health-wise doing it, and it has a very high failure rate. Stock investing, more long-term, it's more towards retirement or buying something in the future. It takes advantage of all of the trends in the stock market and events that happen, be it good or bad. You can profit in a positive way from a stock market. Another thing with stock investors, a true stock investor, or a lot of the people that they say are the richer the rich, or whatever, when they say the rich get richer, it's a big misconception. When the market crash, you want the market to crash because you can buy the stocks at a lower amount, because once you go through the crash or the bear market, the bull market is epic and it runs way longer than the bear. I think every 2.5 years we have somewhat of a adjustment in the market where we might, you know, go back into, you know, the market might take a dip or correct itself. So it's one of those things. Now, when you have a bear market, they say a bear market usually lasts 2.5 years, and we just early in this bear market. So you might have a little bit of time of building your portfolio, but I wouldn't delay with that. You know, if you got a portfolio and you saying, hey man, one day I'm going to get, that day is here, because I mean, these stocks are stagnant right now and they're slowly dropping. Like I said in the other video, around March, April 2023, I think you're going to start seeing a huge drop in these stocks, and a lot of people are going to be shocked at where a lot of stocks that they thought they couldn't achieve will fall in their lap. But as always, guys, man, I'm sorry I made the video so long. I just wanted to get, you know, make it as informational as possible. And as always, guys, the comments, you know, you guys send me are very good. I appreciate the love and support. As always, like, comment, share, and subscribe. Make sure y'all hit that thumbs up button. If you're watching this video, man, just hit the thumbs up button, because it helps the video get out and let other people, you know, understand, or get an understanding of what you guys have just witnessed on the video, and it helps support me as well. But like I said, like, comment, share, and subscribe. I'll see you guys in the next video. I appreciate the love, like I said. I'll see you guys in the next video. Thank you so much.